Good afternoon. This Tuesday, September 22nd. Well, grain trade higher again today. No turnaround Tuesday as bull spreads continue to perform on the corn trade. Soybeans were bull spreading early in the day, but ended up neutralizing late in the session, but still carrying a tighter premium than over the last 3 weeks for November under January versus the corn as well, December under March. So we're seeing exports, another 360,000 metric tons of corn to Mexico this morning, helped fire up today's rally. Some are saying, well, we're seeing exports ramped up right now because they're worried about being tariffed out later in the crop year. But either way, what you might note in that explanation, they're still taking what they want. There's going to be no less. They're taking what they want. One could argue on the beans, if we don't see a further ramp up of soybeans from China here in November and December coming up, but still then they could be forced to buy those beans as we get into the new year. Something I want you to keep in mind. President Trump stepped in 2018 when prices were high. We had the drought in Argentina, and recall we here at Heartland, we hedged up 100% of the bean crop with short-dated puts at $10 that we feared we're going to see record plantings of soybeans, which that occurred in June. And what if we had good weather? We grew not only record plantings that year, we raised a record yield. And then, of course, we had the misallocation of exports for a while when President Trump started fighting China, which in the end, he still won. And if you look back at your receipts between the check you got from President Trump, I know you don't like government checks on that aspect, but still with what you're able to sell your beans for that year and shortly after, and his check, that was a profitable year. So was 2019. So was 2020. So I bring this to your attention before we get to our charts to realize that you've heard the statement, buy the rumor, sell the fact, or sell the rumor, vice versa, sell the rumor, buy the fact, or buy the rumor, sell the fact. Which one do you want? The point is right now they're selling the reality that President Trump's going to be president and we're going to have a trade war. But once we get to January, we're going to end up buying the fact because the trade war is still on. China is still being tariffed aggressively by not only Trump's prior tariffs, but by the Biden administration, who has added tariffs just recently again over electric vehicles. And so China doesn't like us no matter what. But Biden has failed to force China to the original trade agreements. What could happen very quickly is Trump comes in. We're already planning on bean sales, stopping initially, and he tariffs them so aggressively. Like Mr. Wonderful from Shark Tank says, go 400%. Make them get to their knees and be here within 48 hours, wanting to work something out. Now, I've said it in the newsletter, and I'll say it here again. It's uncapitalistic to make China buy our grain unless it's a deal. Well, here's the thing. China is not capitalistic. They don't work under the theory of capitalism, and nor does the rest of the world. Everybody in the world, prove me wrong, everybody in the world throws tariffs on the U.S., yet the U.S. is supposed to be Mr. Good Guy and do nothing. So if it was a fair world, we could argue capitalism, but it's not. It's a trade protections world. I didn't make it. President Trump didn't make it. And the U.S. didn't make it. It's what the world decided to do the U.S. So the only way to break the golden handcuffs that China has on Brazil, because if Trump never existed in this world, guess what? Soybean sales since China came into the World Trading Organization have been declining every year. They put tariffs on of around 7 or 8%. Go check that on me. When they came into the World Trade Agreement, they put tariffs against U.S. soybeans to favor their investments in Brazil. And it's been going on and on and on. So if Trump never existed, we were going to still be losing. It was a slow drip to Chinese torture, so to speak, pun intended, to no exports. So it's either you do something different, and that is break the golden handcuffs by forcing China to overcome its trade protectionist style and buy beans from the United States and other agricultural products. So I'm looking at this with the beans bottoming right now and how they're acting like a bottom, contrary to everybody who's preaching $8 beans. I mean, yeah, maybe next year because we grow too many beans in Brazil and Argentina in January, February, March, and April, and then we grow too many beans because we don't back acreage off and switch more to corn. Yeah, that could be a scenario next year. But for now, I think the worst pricing for beans is playing out. And what if, once they get these beans planted after all this moisture, just like when we get a good plantings on moisture in the ground, all of a sudden July 4th turns hot and dry and we get to August and reproductive weather is not good. Well, let me remind you, for soybeans, that's mid-December through January. Things can change. Our weather service can only get the wind right over the next 10 days. How are we going to trust their forecast 2 months out? So there, I'll get off the soapbox and now let's get to business. Progress reports is part of today's balance. Of course, soybeans, we know, pretty much wrapping up 81% harvested on soybeans. As you can see, most of the north just wrapping up. I don't even know why they said 81%. I can't believe they didn't say 90%. But either way, they put it at 81%, up 14% from last week. Corn, 65% harvested. And as you can see, the south south of this, we'll call it the Mason-Dixon line, even though it's not. Pretty much wrapping up the gut slot of harvest finishing up this week. Dry weather is in play. As we can tell here on the maps, nothing really until October 30, Thursday the 31st. We start getting some moisture. It shows up on the 30th. Well, by that time, this corn crop's going to be 90% wrapped up. Just a small area gets rain. Otherwise, a large portion of Minnesota, Nebraska, South Dakota, Indiana, Ohio, and Illinois will be still harvesting even to the end of the month. So the harvest is coming to an end, and the end users know this. And so they're buying grains. Whether it's front loading or not is irrelevant. They know that the best time to buy grain is when it goes across the scale, when farmers can't store it, because it's got to be cash only. They got to dump it and so they can grab it and steal it. But once it's either in a pile or it's in a bin, you got to bid it to get rid of it, to get it out of the bins so they can have it. So possible wave 2 low came in last week on that slam dunk that we went down into that 968 range. The blue line here comes in at about $10.05, $10.06. So, if we were to pop here another day or two, that probably will stall us. And I realize we're now rolling to January beans. If you look at this is a 60-minute chart on beans. They went through the hourly blue line and went and tagged the purple line. As you can see, the purple line here, it's important, but it gets jagged. It gets hit. The blue is more defining. It gets jagged here too, but then it gets defining. But if we look at this, we could jag that a little bit like they jagged these purple lines here. But the point of this saying is, $10 to 10.02 probably is resistance on this push up. And this will probably be a 1-2. And then this is a 1-2. Then we climb, possibly after the elections. Doesn't matter who's president. We just rally anyway. On wave 3, as maybe China comes in and hoards up a bunch of beans after election. Now we are going to the continuation chart, which January beans came on today because we have November options expiring this Friday. Note that November beans held the 78% retracement of the continuation chart from that low made back in August. And now we're turning up, and this is the January bean contract. Obviously, we're going to run into resistance again where we did the last time up, where we sold a bunch of beans on that rally. Kind of wish we'd have sold more, but we still think there's better chance of a rally yet to come into play. Anyway, near $11. And so near-term resistance on the short term could come in on this play in that 1040, 1050 range. If we go to January beans, there we are. Something around 1040 here, 1039 is where the blue line is for January beans. A little different than on the November. We use a 23-day moving average on this one here to make it line up like the November beans did. A little more slow action here taking place. So, but beans for right now, we did have a 1, 2, 3, 4, 5 wave bounce, wave nasty 2 pullback, and a start of a wave 3 goes into January. Maybe it's President Trump gets in and the Chinese come and buy a bunch of beans anyway after he's in ahead of January, and maybe the bean production, we get to the reproductive stage in mid-December, not so good. Who knows? Weather forecasts are a fickle thing. They've been that way across the world for basically last few years. Climate change. It's always changing, right? I just wanted to zoom in this January bean chart for you to see it a little better. 1037.5 is actually that number on the blue line if you want to write that down. Bean oil. Look at this. We've got a 1, 2 in this next wave up. There's 5 legs. You can see the 1, 2, 3, 4, 5 up. So we've got a 1, 2, 1, and now a 2, and a possible wave 3 getting underway. Bean oil strength today with crude oil. Z45 is getting a lot of conversation. They want to get something done on this, pushing the EPA to announce or else run a bill through lame duck session right away to get something done and get this handled. So Z45 could be the reason why bean oil is firming. Also seeing canola. Remember when China and Canada went at it? Canada basically putting tariffs on electrical vehicles like Biden did. Well, they slammed the low in, and we've been climbing ever since. Ready to take out the October high, the early October high like soybeans, and move on higher as well. What's going on here? Things are climbing. Even soybean meal made a low, did a 1, 2. You can see the 5-wave advance in here. If we count it, you got a little 1, 2, 3, 4, 5. Doing a 2-wave pullback. Even Fibonacci-wise, right to a 786 retracement. Now all we need is to just push through this moving average resistance, which will match up with last week's high of around 223, 224. Start moving through that. All of a sudden, that's going to build something for the soybean market. Now, corn. We yesterday highlighted the newsletter. Look at how Friday or Thursday of last week had an outside day up, met with a corrective day on Friday, and then Monday, another hammer, outside day up, lower low than a previous day, higher high than a previous day, and closing above previous day. led to further buying again today, which now, as we run into moving average resistance here, 421, 423, somewhere in there could be a problem child here. Give us a bounce back. Maybe they bounce tomorrow. Bull markets have a tendency of peaking Monday, Tuesday, pull back Wednesday, then lift late Thursday, Friday. But we do have resistance here at 420 and then again at 432, just under that previous high. Take a look at the continuation chart. You get the same thing. This one almost tagged the previous high on the December contract, and this one now comes in as well, 432. So write this down, 421 to 423 is resistance for corn. Setbacks occur, and then on to 432, 433, 434. 434 and a quarter was this high up here. Pushing through that, well, that's going to get a little interesting. Let's start measuring on the corn continuation chart. The first leg up with both the September contract low and the December rally went right to our moving average. Don't make this stuff up. We showed you this before. It even matched up with that high, which we made a sale into. And now we had a push up to this, and now we've pulled back, and now we should be running higher. You see this measurement here? Well, we should be able to just move this over in minimum expectation. Even if you're a bear, it's an ABC lift. Minimum expectation, we should make it to somewhere into that 468, 472 range, which will then, of course, try to double top with this number. That's where we plan on making our next corn sales, into this price lift. Now let's move on to cattle quick. Live cattle October in delivery, shooting to 188 today. December cattle matching that, as everybody's hoping cash trade is steady with last week in the South at 188. So here we are, right up against the downtrend lines. I've been showing you this forever, and I said it's going to take the cash trade to get us through this, because the board is not going to lift us through. It will actually have to take a cash trade at 188, 189 to make this push on through, and it is still massive resistance, 190 to 188. And so we hedged cattle here, we hedged cattle here, we hedged cattle here. Go back, look at our newsletters on those dates. We did it. And now through this whole thing, we've been saying LRP it or put hedges on if you have nothing on or missed any of these hedges in the past. Same thing goes with feeder cattle. We hedged, you can go back, read our newsletter. We were hedging back in here, we were hedging in here. And now we're recommending, again, hedging. We've stalled at the 62% retracement for November feeder cattle. We didn't even get near our downtrend line, resistance line, let alone 78%. You can throw out the feeder cattle continuation chart on here. Peaked right, this would have been the November contract, peaked right at that value, and then sold off. What we said we could see some bouncing off of this major purple line. Well, November found support before it came off. January feeders came on this week, and lo and behold, even though they're discounted, they're holding it as well at that 245 range. So look for feeder cattle to try to lift something here, but if these feeder cattle turn back down and we have January closing under 242, something is wrong and cattle will be in trouble. Until then, it's being cash led by the nose. Crude oil, final observation, everything's planning out like we said, chaotic ABCs. When we had said an ABC up was coming, it did. Then we said look for an ABC correction. It did. Whether we've peaked here, which would have basically been just underneath our 78% retracement. Here was 78%. We showed you trend lines. We said some kind of low in here. Well, it did bottom in there. Bottomed basically right above 68, and now we've turned up. So one deduction is we had a low for the 22nd, which is the expiration of the November contract, and we bottomed on Monday instead of Tuesday, and then we've turned up. So next scenario likely is an A, B, C up, and then we do another pullback again, A, B, C. We are not forward buying fuel yet because, well, we think a Trump presidency does allow for cheaper fuel prices still, and the reality is OPEC is just ready to release the holdback of production that they've been doing since COVID, so that hangs over us with a larger downtrend in play. And we had shown you this last week, that since we're apexing, now we can start counting the apex waves. This would be an A, a B, a C, D, E, and theoretically you should go out the bottom maintaining the trend line. If not, then we have to do one more play up. But game action right now is chaotic. Elections, Middle East, no oil has been lost yet, but still the market jumps every time it falls to a lower price. They say the war is fine, then the war is not fine, then the war is fine, then the war is not fine. You take your pick. So crude oil, bottom line, what did I just say? Well, we're going to bounce in here for a little bit. Probably resistance again here about 73 to 74, pull back and shove again. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.